Hello and welcome to our November 2024 market update. We cover Wall Street and everything that affects you. First of all,
I'm Max.
I'm Victor, and that's the team. You know us, so we're just going to go on. Underlying thesis, you know it. Max, just do those quick.
All right, I'll go quick. Number one, 90% of the things you worry about never happen. Number two, we make observations, not predictions. Number three, the simplest explanation is usually the best one. Number four, Economics 101, supply and demand applies to most products as well as the markets.
And that's the underlying of how we think about things. So right now, major market.
That's a lot of green, Vic.
I'm sorry, that's a lot of what?
Green.
That's a lot of green back. That's exactly correct. Look at this. The Dow year to date is up what?
16, let's call it 17%.
And the S&P?
S&P is up, let's call it 26%.
So we're 11, not even 11 months, 10 months and 2 weeks, and we got 17, 20, 26, and what's the last one?
29% for the NASDAQ. Wow.
That's hot.
That's burning.
Yeah, woo. All right, the Dow Jones Industrial Average, you do this one.
All right, as you can see, it's on a big uptrend. We have the on the far right side, our right side, you can see that the market is trending way up. We just after the election, the market skyrocketed up, and you can see that on the next chart as well. And the S&P 500, the market after the election it was a little bit was uncertain, and then the market liked what the outcome was during the election, and it skyrocketed up.
Yep, you see that gap all of a sudden? That was the day after the election, and the exact same thing on NASDAQ. The 200-day moving average, the 50-day, and even the 20-day, all strong. So, I'm going to do this real quick. We brought this up another time or two, but I want to put this in perspective. We'll come back to this. Now, it is a gloomy moment in history. Not in the lifetime of any man who reads the paper has there been so much grave and deep apprehension. Never has the future seemed so dark and incalculable. The domestic economic situation is chaos. Prices are so high as to be utterly impossible. The political cauldron seethes and bubbles with uncertainty. And the United States is beset with racial, industrial, and commercial chaos, drifting where we know not. Russia hangs like a storm cloud in the horizon of Europe, dark and silent. It's a solemn moment, and no man can feel indifference. Of our own troubles, no one can see the end. We'll come back to that, and you'll see the significance. So first, we're going to go into some income, some yields. Interest rates are changing. What's happening here, Max?
All right, as you can see, interest rates are changing. They're coming down. The Fed came out the other day and said that they're going to cut interest rates a quarter of a basis point.
Yeah, was that the Fed? No, I'm sorry. I got ahead. I thought the Fed was next. Okay.
So we'll see it on a couple of charts what the Fed is doing. So go ahead, Vic.
All right.
So as you can see, the yield curve was inverted at one point. Now it's come out of the inversion, and we're trending that way.
Yep, you're starting to see rates flatten out and go up. So we know the Federal Reserve Board began lowering rates. What does that mean to you? I'll do it. We'll do even odd.
Sounds
Lower
good.
interest rates benefit income-generating securities. When rates go down, bond prices go
up.
You got it. Okay.
So look for companies with a history of raising dividends. When we put it in the dividend portfolio, that's one of the things we look for, is to have the company has to have a history of raising dividends.
And dividend stocks such as utilities and REITs. What are REITs?
REITs are real estate investment trusts.
Historically perform very well in a lowering interest rate scenario, which is what we have. And
for a list of quality dividend companies, give us a call.
Okay, here's what Max was talking about. What did the Fed just do?
The Fed came out. Jerome Powell came out. Was it last Thursday?
Was it last Thursday or the Thursday?
Yeah, it was last Thursday. And he came out and said, you know what? We're going to lower interest rates 0.25%. And that was the consensus on Wall Street. So that even propelled the markets up even higher.
Absolutely. So now, if you're in retirement, what do you look for? In a declining interest rate environment, you focus on generating regular income from investments that generate a steady income stream. Because remember, now you want to go long, meaning lock in rates, because rates a year from now are likely to be
lower.
You got it. So what else? You want to preserve growth and grow capital to keep up with inflation, and you need to balance income with long-term growth. So what types of investments are there for?
I'll do the first one. The first one is REITs. We just talked about there are real estate investment trusts. So those are companies that own real estate, and they have to pay the income first to the investors, and then they can profit.
And the biggest area of growth in REITs right now is the artificial intelligence data center.
Correct.
That we're going to get into. Bonds, municipal bonds, corporate bonds. Again, now is the time to lengthen maturity. And you want to lengthen maturity because if you go short, when your money matures, your rate is
lower.
You got it.
And then finally, dividend paying stocks. We talked about those briefly, but those are companies that are pay a dividend and continually raise their dividend.
Yep, and you put them all together, and that's how you make a diversified portfolio. So, what do we do for taxes and people in retirement?
So, taxation of income investments. So we have interest income, qualified dividends, and municipal bonds. So, asset location strategies, we place them in taxable income generating assets and tax advantage accounts, IRAs, 401ks, 403bs, and those hold tax efficient investments in taxable accounts.
And the key once you're in retirement, by the way, because you really can't change your income a lot, is you need to manage taxes. You need to minimize the tax impact, and that's part of what we do. We balance out how much should you take from your tax deferred, how much should you take from your regular, and sometimes it's better to take from the tax deferred now, depends on the situation. So, big change in technology. What's happening in technology, Max?
The buzzword of the year, AI, continues to make an impact in industries.
Big time. So we're seeing a very big demand because of artificial intelligence. A normal computer versus an AI, the AI computer requires 10 times the power to make its computations. And you can see on that, all those little blue things are big data centers. And here's what they need in the data centers.
So this is zoomed in. If you see on our right side, that's Virginia. So a lot of those places are in Virginia, and there's 475 data centers just in Virginia alone.
How many?
475.
Man,
that's a lot.
Yep, I need to build a data center and rent it out.
So AI growth fuels demand for data centers to handle massive data storage and computation. Data centers are energy intensive and require robust infrastructure. So examples are Digital Realty Trust and Equinox. Victor, we have them in our portfolios, myself and Victor included. We have them in our portfolios.
They generate income, and you know the growth is there. So we got it from both sides. Absolutely. Dividend stocks also looking good. As we said, dividend stocks in companies that do energy, power, and data infrastructure. Look for companies that provide stable income. That's not a horse, no stable income there. Okay. And focus on those things that benefit.
They energize income.
There you go, exactly. And focus on companies that benefit from lower interest rates. So let's talk about this.
All right, the election impact. So the 2024 victor, Donald Trump, he's the 45th and 47th president, but more importantly, how does that impact you and your portfolio?
Yeah. So take a look at a couple of things in the past. 2016, on the left, you see the S&P. And then 2016, remember, Trump won. And look at the S&P afterwards. It went up. 2020, the lower under, Biden won. So you have a Republican on the top, a Democrat on the top. And the lower one after 2020, did the market do what? The market went up. So we know after an election years historically are very good for the markets. So this is what's happening right now. What's that big jump in there, Max?
That was what happened right after the election. Big jump. It looks like it's favorable. The market was favorable when Donald Trump was elected.
Yep, you see that big gap? That's November 6th, the day after the election. We knew the results. The smoother curve is simply I think it's a 200-day moving average. You can see that's moved up. How do elections normally work out?
Elections won't normally work out that it's about a 12% return for either candidate, but for a Republican, it's about 16%, and for a Democrat, it's about 8.5%.
Yep. And by the way, you can go through all of the presidents in the past, And the same thing, there's been a couple of down years. Bush had a down year, but he had this thing called 9/11.
Yeah.
That sort of set things off. But regardless, some people are worried, well, Bush got elected.
Bush had 9/11 and he had the dot-com bubble.
Oh, wow. That was not a good start.
Yeah, and he had dot-com bubble, 9/11, and he had the financial crisis.
Wow, he had a heartburn. So, but the key is, whether you have a Democrat or Republican, the market continues to move forward. We have some people saying, oh my God, a Republican got elected, what do I do? Or some people say, oh my God, the Democrat lost, what do we do? It doesn't matter. It matters to a degree, but the market continues to move forward.
And the president, and like Victor was saying, the president is more dependent on the economy than the economy is dependent on the president.
Absolutely.
And and this speaks perfectly to that. It doesn't matter if it's a Republican or a Democrat. I mean, even under Biden, if we close out this year up 25%, if we close it today,
wow.
He's this only goes to till 2023.
Yeah.
So that's going to increase how he performed throughout his 4 years.
Yeah.
So it doesn't matter whether it was Trump or Biden; they both did well.
You still go to the store, you still get in your car, you still buy whatever you need, you still spend your money.
Mm-hmm.
All right, now look at this. We're going to put together a number of things. One of the questions we're hitting: what do we do for the rest of the year, and what's the outlook for 2025? So we put together a number of facts to give you our consensus. Number one.
We're in a new secular bull market. We've talked about this. And we're at the start of a secular bull market with the average historical bull lasting around 6.25 years.
I'm sorry, how long's the average last?
6.25 years. We're about 2 years into the new bull market.
Absolutely. Number two, the Federal Reserve Board has just begun its rate cutting cycles. Almost all of the major bull markets began when the Fed started to lower interest rates. Number three,
declining inflation. The inflation report came out today that said inflation was declining. So a major factor in the 2022 market downturn has begun to slow, providing tailwinds for the stock market.
And what was this morning's report? 2.6%?
2.6, yep.
Number four, reduced recession fears. Worldwide, you've been hearing, some of it called it the most advertised recession in history.
Yeah.
We were going to have one in 21, then we're going to have in 22, then we're going to have one in 23, then we're going to have one in 22. Well, now the fear of recession because of the strength of the economies has slowed down.
Technological shifts with AI. Every single bull market has had a technological advancement that has propelled the bull market. So we're seeing it with AI. We're seeing a paradigm shift with artificial intelligence still in its early stages, but with vast potential to reshape the industries.
One of the big factors that helped the Clinton years, it had the big growth of the internet during that year. Mm-hmm. Number six.
AI-driven profitability. Already AI has started boosting profitability across sectors, and we're only scratching the surface of its potential.
Was I supposed to do six?
Yeah.
I'm sorry.
You're fine. You're good.
Now, I want you to realize this. We have a lot of people that are concerned one way or the other about the election. What we've just given is 6 different reasons, totally unrelated to the election, of why we think the market is strong. And let's add the election. We now have an incoming administration that is pro-growth, pro-business, pro-peace, and only adds to the economic issues outlined. Now, I want you to watch this next thing very closely, because what we're seeing right now parallels what we had with 1980 and the beginning of the Reagan administration. Back then, if you remember 1980, Paul Volcker in 79-80, interest rates were sky high, 21.5%. Fed started lowering rate. We got Reagan in there. Reagan was pro-growth, pro-business, pro-peace, and we started deregulation. And then look at the third paragraph, because this is key. We just said the average is 6.25 years. We don't know what's going to happen the next 5 or 6 years. But if I look at history, Max, I want you to read out the number 3 paragraph.
That bull market from 1982 to 2000 was marked by transformative growth spanning nearly 2 decades and driving the Dow from under 800 to over 11,000.
So that market lasted how long?
That market lasted 18 years.
18 years. And the reason we're doing that, look at the last pair. It was fueled by tax cuts. We're getting those now. Deregulation. We're getting those now. Prudent Federal Reserve action, lowering rates. It heightened the powerful role of monetary policy and economic innovation. If you look at what happened then, leading to one of the longest bull markets in history, the parallels are striking. We're seeing the exact same phenomena going on right now. And if you see that little square in the middle, that is the new symbol. What was it, Josh, the technical name?
Acceleration is
not compound growth, exponential growth. That's a symbol of exponential growth. And by the way, I think that a symbol, that box originally came from the chart of a company called NVIDIA. It went sideways, and then it took off in the last 2 years. That is exponential growth. Okay, we said this earlier, and I'm going to say it one more time, because here's where we make our point. It is a gloomy moment in history, not in the lifetime of any man who reads the paper. This paper has been so much grave and deep apprehension. Never has been the future seemed so dark and incalculable. The best domestic economic situation is in chaos. Prices are so high as to be utterly impossible. The political cauldron seethes and bubbles with uncertainty. The United States is beset with racial, industrial, and commercial chaos, drifting we know not where. Russia hangs like a storm cloud on the horizon of Europe, dark and silent. It is a solemn moment. No man can feel indifference. Of our own troubles, no man can see the end. Although you think that describes today, when was that published, Max?
It was published in 1854.
October the 10th, 1854. Wow. So, we have a strong market. Don't try to time it. We've done this multiple times. It is extremely difficult to time the market. You got to have your right sell and your right buys. That's the hardest thing in the world to do. No one has yet to be able to do it successfully on a continuous basis.
And it's about time in the market, not timing the market.
I'm sorry, what did you say?
It's about time in the market, not timing the market.
Exactly. So, Max, what's the difference between those little red circles on the bottom and the big blue mountains on the top?
Those little valleys are, that's what those bear markets. And those huge blue mountains, that's the bull markets. And Victor pointed out there's the 1982 to 2000.
And look at that big mountain. By the way, we've already told you a few times the average bull market lasts 6.25 years. Statistically, what is the
11
average?
months. Not even a year.
Not even a year is the average 11 market. The odds are overwhelmingly on your side. And
there it is.
There it is, the pad. Oh, yeah, there we go. Exactly that.
It's like we memorized it.
Somehow, either that or it knew where we were going. So our job is to bring all the current events up to date, give you a perspective. We take out the emotion. We give you historical context. And, as always, remember,
we're here looking out for you.
Thanks for watching us today.
See you next month.